This is the Texas Land Guys podcast, hosted by brothers Tim Dosch and Tom Dosch. With their partners David Marshall and Trip Rich, they have built DMRE, the leading land brokerage in Texas. With decades of experience brokering deals between landowners and real estate developers, they take you inside the deals that move the market.
Well, welcome to the Texas Land Guys podcast. Tim, how are you doing this morning?
I'm doing good. How are you doing?
I'm good. It's hard to believe that we're already here sitting in February. Already, February obviously being a short month, we're already on the back end of February, which is pretty crazy just to think about this year, 2026. I know we were talking the other day. It's still kind of weird to be like we're in 2026 and talking about in a couple of years, we're going to be talking about 2030. Which is pretty wild. But it's been a really busy start to the year, just with a lot of new listings that we've brought out. And we had a fast start out in Austin with several closings early in the year. So it's been good just to see some good activity. And the beginning of the year is always fun because you feel like you get deep into the year and people are ready to just kind of finish what they're working on. And then they're looking for the calendar to change. And so this is always a good time in the year, kind of this sprint until spring break. And then, obviously summer and all that.
Yeah, you get these kind of sprints in our business. It's kind of funny because you're right. There's a definitive one, January to spring break. And then you have the sprint from spring break to summer because everybody's worried about once summer hits, it's like you get into like quicksand and stuff doesn't move. And then really the after Labor Day sprint, probably to Thanksgiving. And then you're starting the year all over again. But I think we're very blessed to have a lot of really good deals we're working on, very real deals in spite of a market that is, I would say hasn't improved much, since last year. But I know you guys have a lot of great new listings up there in Dallas you're excited about.
Yeah, I was going to tell you about, there's one specifically that it's really exciting. We've been talking to this landowner probably for 3 or 4 years now about a property that he assembled and it's adjacent to downtown McKinney. And I know I've talked to you some about downtown McKinney. It's a historical downtown. And I know you've been there, but I think it'd been probably a long time. And it's changed a lot. Like I had lunch with the city planner and a couple officials from the city, and they talked about the city has like drastically changed in the last 10 years. There used to be like 60% of downtown was leased. Now it's like 100% leased. And
Wow.
their tenants have really improved. They've expanded the size of it pretty significantly because it's an old downtown that was built in kind of the early to mid 1800s. And then they have these big historic mansions around it. So there's the historic neighborhood, and then there's the actual downtown square itself. And it's kind of like, the idyllic America. It's like what you would want or hope to find if you came to Texas. This really old downtown where there's like a cowboy hat store on the square that's like really famous, and everybody goes there in DFW to get their cowboy hat like custom made at that store. And then there's all these other neat kind of shops and some really good restaurants that we like a lot. And there's some parks. And so anyways, it's a really pretty incredible, just like existing downtown. And then the city of McKinney has really been expanding it. And so they hired Lake Flato to do this major kind of like master plan mixed use concept for their new city hall. And they moved it, which I think was really smart. So they moved it east of Highway 5, which historically kind of runs right through downtown. It's at grade, so it's not like people are, flying through there. But historically, like you didn't really go east of 5. There's like the downtown ended there. Well, they built their big complex, really nice city hall east of there. And then between that and downtown, Robert Shaw developed a mid-rise wrap multifamily project. So you're seeing all this growth. And at the same time, the landowner that we're representing, his 30 acres, assembled like a number of different parcels, all directly across the street from where City Hall is now. And so it's 30 acres of zone land. It's all walkable back into the historic downtown. And what's incredible is at the same time, just east of him, on the other side of him, the McKinney Airport now is a national airport. They signed up a commercial airline. They're talking to some other commercial airlines. So you're in the middle of this historic downtown, this historic square where there's incredible shopping and everything you would want, walkability. But then you also have this airport that's, really close by, close enough, but not too close from a residential standpoint. And so we're really excited. We launched that one about a month ago, middle of January. And because it's 30 acres and because the zoning allows for 4 to 5 stories, and a mix of different uses. Like it could be a corporate campus. The city would love to see like a hotel conference center that kind of plays off the airport and gets people into town during the day. But it also, he's done plans for mixed use, and we've had offers from multifamily developers for wrap phases on the tract, like 4 or 5 acre phases. But he's also open to just selling the whole 30 acres. And someone could do a pretty incredible, large scale mixed use development on the 30 acres. So we're really excited about that. It's downtown McKinney. It's kind of an area that I fell in love with when we moved up here. I live in Frisco, but we drove down there, and it's just so unique to be able to walk around. And I know what you and I hear all the time from developers is walkability, and the importance of walkability in like restaurants and cool coffee shops. And this is just completely full of that. So that's one that we're really excited about. It'll be interesting to see if it ends up going to one, large kind of big institutional developer, or if it goes to more of like a local, developer that does a lot in the area, or if it gets more carved up and, becomes a multi-phase project. But we're expecting a ton of interest on that one. And some of our other listings, are more just like single phase opportunities. So a site like this, that's a large mixed use site, is pretty fun to work on.
Yeah, it's a super exciting site. That's a huge site. I mean, with the area you're talking about and how much densities are in that area, 30 acres is a massive site, because you could talk about, technically you could fit, thousands of units of multifamily on, if it was all multifamily, or, any of these uses, you can fit a lot on the site like that. Because typically you're probably looking at, a 5 to 8 acre site or 4 to 8 acre site in that kind of environment. Like you're saying, it's more of a one phase type deal. And those are fun to work on because they're a lot harder to work on, because you get a lot of different options for the seller. Like you're saying, maybe it's one buyer, maybe it's multiple buyers. And if it's multiple buyers, you have to look at transaction risk, and what if one group gets it done, but the other doesn't? And do they their agreements have to be signed between them as far as cross access or, working together? It reminds me of a deal we did in Houston over in River Oaks. It was a much smaller site, but it was about maybe 6 or 7 acres at the hard corner of West Alabama and Kirby, which again is a huge site because you're building, 40-story high rises there. And we ended up selling that to 3 different groups. But there's so much more you have to think through on a deal like that versus a single phase type of deal. But that sounds super exciting.
Yeah, we've been talking, like I said, I've been talking to the seller for a while. And as he was getting offers before we are now marketing it for him, that was one of the things I talked to him about, was you can make a sale, to a developer, and they take maybe like the best part of the site. They take 4 or 5 acres and they go develop a project. But it's really important to realize that execution could be really good or really bad for the rest of the site.
Yeah.
And if they don't do well, or if they take the very best part of the site, you actually, that sale could have been a good initial sale. It could actually diminish the value of like the next sale or the future sales. And also it's just thinking about the long term, what's the value of the money today versus waiting on a 30 acre site, selling 4 to 5 acre wrap phases. It's going to take, a decade or more to get through that. And so, we're putting together a plan to make sure we're thinking about that. And I think the timing's really good. Like, it's pretty crazy, Tim. McKinney was voted the most affordable city in the US. And then it was also voted the #1 real estate market in the US. And then we just recently saw that Dallas, Fort Worth was voted like the #1 tech hub in the US, which is not something we normally get, credit for. Or you don't think of Dallas as that. And I know those things they'll move around, and I don't know that we'll get it 2 years in a row, but those kind of, tailwinds, not headwinds, but tailwinds. And then also having the World Cup here this summer and just so much focus on DFW as a market. I think it's a really unique opportunity because you're not, in downtown Dallas where there's a lot of issues right now, just with, unfortunately, there's businesses moving out of there, like AT&T deciding to leave downtown and go out to Plano. You have, homelessness and crime, and also just, it's so expensive downtown.
Yeah.
The, land's really expensive, and people, but most of your workforce isn't going to be living like close to downtown. It's kind of like Houston. Like the workforce is not living down there. So you're going to probably go out in Houston, you're going to go out west, and it's just, the land's not going to be as expensive. You're going to be able to get more of it. And then people can actually commute to work and get to work. So yeah, it'll be fun. I'll give an update later as we get further along on this, on just what this site becomes, but this will be a fun one to work on.
Yeah, that'll be super exciting to keep hearing about that, where your offers come in and where are the competing uses. And just kind of the decision-making part of it of, which way do you go and why do you go that way? And we obviously never make the decision for our client, but we get included a lot in those conversations. And they want a recommendation and want to know what we think and why. And those are probably the most fun things to work on, where it is kind of complicated and there's multiple good options, good directions you can go, and trying to figure out which way to help guide them. So that's cool.
Yeah, and thinking about what we were going to talk about this morning, a conversation I've been having pretty much every day right now with sellers is now the time to sell, because a lot of landowners, and I should back up, a lot of landowners that are actually developers or had bought a site for a specific purpose want to sell, but they just don't know if now is the time. And so you and I were talking about this concept of waiting for the market to come back isn't really a strategy.
Mm-hmm. Yeah.
Because what we're seeing is we're seeing some developers that bought sites, and this isn't even a post-COVID problem. There's some developers that bought sites, back in 15, 16, 10 years ago now.
Yeah.
And continuing to wait for a market to come back that just hasn't fully come back. And we did see in, last year in 25 and some in 24, we took some sites to market where the sites had gone back to lenders or they had gone back to the bank, and it was time to basically move those sites at whatever the market value was. And I think you and I were amazed, because in some cases, you're 10 years later on a transaction and an urban area of Houston or Dallas has not come back. And so whereas, pricing was $200 a foot in an area, it's never come back above $100 10 years later.
Yeah.
And so just this idea of the market's going to come back, we'll wait. I think, I think 2025 is going to be a good year, survive to 2025. Now it's going to be, I think 2027 will be heaven.
That's right.
And then it's going to be 2028, whatever it is. But that's not always the case. And it's really easy to always just be looking out a year or two. So I'm having a lot of these conversations because there's, I think, more and more sellers and developers that have been holding on, and they're realizing my basis just keeps going up. It's like last year it was 20 million.
Yeah.
Now it's 21 million. And we were talking about it. At what point do you just realize, like, I need to go out to market? Because the market is not bad right now. It's just challenging. But I think for good sites, there's still a market to sell. There's just not going to be a proliferation of buyers. There's going to be fewer real buyers, but there are real buyers out there.
I think that's a good point. A lot of times we see when you do take these deals out, because I think we have examples where we have clients and sellers that are not taking their site out, and so they're not getting to see the market, how the market would look at their site. But then we also have the example of the sellers who are taking their sites out, because we're seeing a lot of that right now, where sellers are saying, "Hey, I've had this for a long time. I decided to sell it, and so the question is, do I sell it now, or do I wait, 12 months or 36 months?" And some of those sellers are saying, "All right, I'm just going to go out. I'm going to go sell it." And we've actually seen the market really respond to those deals and step up. And we always want to do our best and get the highest price possible. But we've been surprised at some of these, how the quality of the developer, the quality of the offer, how real they've been. In some cases, getting multiple offers that are really strong, where the seller has better options than we thought they would have with where the market is today. And so I think that's something to really be aware of, because you never really get to see that if you don't go to market and really test the market. And some of these sites you're talking about are good sites. Maybe that submarket's a little bit softer. The market in general is a little bit softer, especially in the infill market, but they're still good sites. And there's still sites that are going to demand interest from the market. And so, we have some of these sellers who are saying, "Hey, if my number is 200 a foot, I don't want to take 175 a foot. I want to wait." And 175 a foot may not even be the market. Maybe the market's 140 a foot, but we can find someone who will pay 175 a foot and actually close. I think you have to really look at that hard if you're a seller, to really look hard at taking that kind of an offer, because getting to 200 a foot or north of that, because what we've seen is like this kind of creep of like, I want 200 a foot, and then 18 months later, it's like, I want 225 a foot. And then it's like, 18 months later, I want 250 a foot. And then the market never gets there. And then they're like, well, we have this internal rate of return, and, we're charging ourselves 10% a year. And it's like, you're going to be in this for $500 a foot before you know it.
Yeah.
And the market doesn't move like that. I mean, land doesn't typically move up really quickly in value. It does sometimes happen, but normally that's in these kind of fringe kind of markets or these emerging markets, that you have to catch it just the right time. Like, I'm sure in McKinney, there was a time where it just caught fire, and you saw this incredible ramp up in appreciation. But then that kind of plateaus at some point. It doesn't just keep doing that, and people can kind of lie to themselves and think that it's going to happen again. And if I just hold it long enough, it'll happen again. And I think that's a really dangerous mentality to have.
Well, and it's interesting because we talk a lot about how there's landowners, especially in urban places like Dallas and Houston, that they're many times it's like a family and they don't really need to sell. They've maybe held properties for generations, or if they cash flow, they don't have to sell. But we're in a unique environment now because there was so much transaction activity post-COVID, and there was a lot of transaction activity because the market got so hot that land was taken down prior to development starts. And so the projects never fully materialized. It never actually came out of the ground. And most of that land doesn't get taken down all cash. It gets taken down with some kind of debt. And even if it did get taken down all cash isn't free either at the end of the day. I mean, there's a desire to have a certain return. We have, clients that when they'll take a property down all cash, they're still charging an internal rate of return, even to their own, like principals. It can make sense. There's a cost to that money. And so that ticker of value that's going up, we're getting to this point now where we're hearing about, and probably started seeing it in 24, where debt was coming due. And a lot of landowners were just extending it. And a lot of banks have been extending it. And we're still talking to banks that continue to extend. What I think is so interesting, though, is I think we're getting to the point now where if you have been extending your land loan now for like 2 years, and even if the bank is willing, it's going to almost at some point just not really make sense to keep extending that land loan, because what that's going to be doing to your basis, you're never going to be able to get out of the deal. And so there's the landowners that I think are starting to realize that. And so we're getting calls to say, okay, I want to sell in 2026. And so if someone tells me that, it's okay, then we need to go to market like right now. If you want to sell this year, you can't wait, because the longer you wait and the shorter time period we have to close, that's going to have a direct impact on value. And so when we're getting those calls, the good thing about that is most of those landowners are saying, like, you take it to market. We trust you guys. You go get the best buyer at the best price, and I'm going to sell. Versus the landowners that are still holding on to like 2021 value, and they want, they're like extending the debt, but then they still want a price that's still so far above, maybe even where land ever closed.
Yeah.
And so I think some of those, we're actually going to start to see some of those deals just go back to lenders and the banks, because it's just that position just doesn't make sense right now with where we are in the market.
Yeah, we've talked a lot about this in the podcast, but being realistic on where the market truly is. I think a lot of people, they have these numbers in their head, or these ideas they hold on to that are typically not based in fact. I mean, there's not really comps to support it. Maybe there's loosely comps to support it, but we, especially in the suburbs, will deal with people all the time that they want some new high watermark of pricing, like, $12 or $13 a foot would be a really good price. It's probably where the market is. They want $17 a foot or $18 a foot. Maybe we can get someone to $15 a foot, which is just an incredible deal for them. But because they sort of have this idea of like, well, my property should be worth more, so I need 17 a foot, or I'm not going to transact, but I really want to sell. You're like, you just got to be realistic. I mean, and the same thing in the infill market. I mean, we're not seeing a lot of values above $200 a foot in the infill market. I don't know if, I think there are sites that could be over $200 a foot, but those are rare sites, and those are really special situations. And so you get these sellers that are thinking, I need $250 a foot or $300 a foot. It isn't there. I mean, there's no real world where that happens today. And then you will get these really good offers. They're $150 to $175 a foot that are groups that actually have capital. They can close relatively quickly. And so I think just being realistic as a seller, do I really want to sell? If I'm going to choose to hold, am I being honest with myself about what that means and the real cost of that? Being able to listen to some outside input, or let the market just speak, because we don't determine what the value is or what the price is. The market determines that, and our job is just to get out there and get as many offers and really present the site in the best light we can to get people engaged on and excited about pursuing it.
Yeah, I mean, valuing land, to your point, it can be really difficult, especially when we're getting a lot of the questions we're getting right now, which are, what do you think my property's worth? And so we'll go through our analysis, but then the follow-up is, okay, but I need to close in like 6 months. And that's really difficult from a valuation standpoint, because the market is not closing on properties in 6 months. Like, the market's not.
Yeah.
So you talk to 8 out of 10 developers, they're going to say, I need time to close into construction. I'm just not going to do that. So many people got burned doing that the last couple of years. And there's not really a lot of capital that wants to be in that position. But then there still are developers that will do it. The question is that a site that justifies it? And that's where valuing the land can be tricky, because I'm working on a couple where saying we need to be closed in 6 months actually doesn't have a huge impact on the value, only because the site's so well located. I know that's not going to work for 80% of the market, but for the 20% it works for, they're still going to want to go do it, because they're going to say, well, yeah, I don't like taking that risk normally, but I'll take it on that site. And I know I'm going to have to compete because it's a good site. So I'm going to still be at a good number. But then compare that to maybe one of these areas where we've seen a ton of supply. So it could be multifamily, it could be single family, or even industrial, just an area with higher vacancy. If you're in the same position as a seller, saying, I need to close in 6 months. And I had this conversation with the developer just the other day. I told him, your number that you're at, we probably need to cut that 40%, maybe 50% if you're going to close that quick. Because they're currently under contract with the developer that's trying to raise capital that, continues to come back and say, I need an extension. There's not equity. There's a ton of supply in the area. There's continued, supply pipeline. And so in that specific case, that's going to be the story. It's going to be a really significant deduction. And it's really because it's probably more of an investor that's taking you out of it, or someone that might have to sit on that site for a couple of years until it makes sense to develop again. And so that's where just our knowledge of what's going on, in the market is so important, because you just can't put a blanket, like a 10% discount on it. Or sometimes you can't put a 40% discount on it. It can be, it can be anywhere in between depending on the site.
That's such a good point about it. So site specific, because I'm thinking about, we've had sites that have closed quickly at really good numbers, and they're just sites where there are no issues. They're ready to go. They're in a really good market. There's high demand. We have other sites that are really good market, high demand, but have site issues. Like there's no utilities. You can get utilities through the mud, but you have to go through that whole process of working out a deal with the mud, spending money to get that infrastructure in place. Another deal I'm working on, a ready to go site from a site, utility standpoint, but there's all these easements on it that need to be abandoned with the JRC. So that takes time with the city to get that done. So I think as a seller, understanding what about your site is unique, and how do you accomplish overcoming some of those issues or solving some of those issues, and then finding a buyer that is the right kind of buyer to partner on with that. So in both the situations I just mentioned, they're very strong developers. They're very experienced. They know how to solve these issues. They're also developers who are going to treat the seller right. They're not going to try and take advantage of the seller because of the issue. They're not going to try and lower the price unnecessarily because of the issue. But sometimes it just takes time to work through those things. And so, the tendency is sometimes sellers want to kind of bail out and be like, oh, there's these challenges. It's going to take longer, or they got to extend because there's some problem with the city or with permitting, or the mud is giving them a problem. And sometimes you just got to work through those things together and realize, if I restart this all over again, I'm really delaying, when this happens. And now there's more market risk, because I could be closing a year from now or 18 months from now in a different market where this deal doesn't get done. So I think really understanding the nuances of your site and what are the challenges, because there's always challenges. I mean, we work on so many deals, and I'm just thinking right now, I have some that are significant environmental problems, that I need a buyer who really understands. They're all solvable and we can work through it, but I got to get the right buyer who understands that. And then these, easement issues, utility issues. I mean, every site normally has challenges for the most part.
Tim, when you're thinking about being on the seller side, since we have Ascent, our investment side, and we also own and sell properties, we were talking about this not too long ago. We've sold a lot of properties now as the principal. And I think we ran through it one time, and it may not still be the case on every deal, but it was like every deal we've sold, the buyers come back trying to get something. Like whether the buyers come back and try to get more time, they've tried to maybe change something about the site, like the acreage, they've tried to reduce the price. And that is a really interesting balance. I'd be interested to hear, and I know it's hard to generalize it, but there's been times where we've worked with the buyer, and there's been times where we've said no, and we've said we're not going to budge, and so we held that line. And I'm interested in your opinion, because we've talked before about you can't always be so black and white that it's just not willing to budge. And that's how a lot of landowners are. They have such high demands of like hard money day one or a deal happening in a certain time period. And I get it if there actually is time pressure and they're willing to give something for it, to say like, it's got to close by the end of the year. And so I'm willing to give something for that. But I'm talking about landowners where it's like, they don't really even care when it closes. They're just going to be difficult. So how have you thought through some of those requests? Because we pretty much get them on every deal and we get them on the brokerage side too. But I think it's just a normal part of our business that a lot of landowners don't realize. You're going to get hit up for something after you go under contract. And then it's the discernment to know if this is a real issue or not.
Yeah, I mean, we're very pragmatic. And so we're looking at the overall multiple of the sale, to our LPs. And then we also do look at the IRR. We care about that, and the surety of close. And so if someone comes to us and they want to lower the price a little bit, but we can close quicker and we still hit our multiple, we're okay with that. I mean, obviously we love to not have a price reduction. But if we can get the deal done and we think it's reasonable, that the buyers, and they're not just trying to take advantage of us to get a little bit cheaper deal. There's reasons why they're trying to lower the price, but they can still close. We've had some pretty interesting, decisions where we've actually done the opposite thing. So I'm thinking of a deal where we had two sites next to each other. On one of them, we gave the buyer more time to get the deal capitalized because we believed that they could get it capitalized. We thought that they were close. So we gave them, I think, maybe 3 more months or something. They got the deal capitalized, got it closed with institutional capital. Then we sold the site next door a year later, and we actually didn't give the buyer more time. We forced them to close without getting the deal capitalized, and actually closing the land without capitalizing the deal. And then fast forward 8 or 9 months, and you told me I think they're maybe just now getting it capitalized, or they had.
Yeah,
so we
just
would have been
just
hanging on for another 8 or 9 months, but we actually got it closing, which really helped our IRR. So if we'd held on to it for 9 more months, that kills our IRR for our LPs, even though the multiple would have been the same. So, I think it's a lot of kind of deal by deal, decision making. We don't always do the same thing. Sometimes we will not give a price reduction because we think that, the buyer's just trying to, take advantage of us and is not legitimate. And then sometimes we will. But I think what we're always trying to do is we would rather have a quicker close that is at a multiple we feel good about than have a longer strung out close, even if it's a potentially higher multiple. Because a lot of times we're talking about the difference from like a 1.7 to like, 1.8 multiple or something really small, but there's a lot more deal risk. And we know that if we, were to hold on for another couple of months or 6 months and then the deal doesn't close and now we're starting over again, it's going to kill our IRR. So, I mean, not that we've, mastered this, but I think like you're saying, we've sold a lot of deals now. And, we're always trying to optimize how quickly can we sell deals and, basically turn the money for our LPs, because they would love to just keep getting these multiples as quick as they can. And they prefer that over us taking more market risk to get slightly higher multiples. So if you can think of it in terms of like, if we can just get to bat and always hit a single, and sometimes we hit a double or triple, but we're always hitting singles. We prefer that over trying to hold out for the home run every single time, but then striking out, half the time, which we see that so much with so many sellers. And just in general in the real estate market, people are always trying to kind of get the big hit. And then so often they make decisions that make them vulnerable to a big loss. And these are really smart people, but it happens all the time.
Well, I like how you framed all of that with the whole point is just what's the return to our investors at the end of the day, because it takes all the emotion out of it, because it can be really frustrating. Because normally the way it goes on being retraded is you were told something and then you're being retraded. So, it's we'll close on balance sheet and we'll use our fund and then a different story. But I think we also, what's helpful is we're not trying to be unreasonable, like you said. That plays into it. And by that, we mean we know if it's a real issue or if it's not.
Yeah.
Like if there's a real issue there, if it's completely different than what they said, or if there's a legitimate, kind of reasoning behind it, then we have worked with people. But like you said, it's also going to just depend on the situation and the discernment with that. I was going to say, we've been talking more about a seller viewpoint. What about the buyer viewpoint, in your opinion, when you're thinking about buyers waiting for the market to come back? So if you've been a developer that wants to develop in Texas, but the market's been pretty difficult to develop in since the second half of 22, we're now 4 years into this time period. But also we got to keep in mind that DFW, Houston, Austin, depending on which market we're talking about, could be one of the best markets to develop in the whole country right now. But you might still be on the sidelines because you're still waiting for it to get better. So what would you say for, more speaking to the buyer side, the developer side, about don't just wait for the market to get better as a strategy?
I think a lot of times it's not up to the buyer. I think from our experience, the reason that it is a buyer's market is because so many buyers are on the sidelines, not by choice, but they can't get deals done. And we had a really good meeting with one of our top clients earlier this week, and they are active, they're doing deals, but they're struggling to capitalize deals. And they were just saying, man, we know whatever we get done today is going to be a really good deal. Just like you're saying, I mean, this is a time to go do deals. When everybody's on the sidelines and they're struggling to capitalize deals, when it's really tough out there, when rents are soft, that's when you want to go do the deals. But we were also talking about just and this is a multifamily developer, but just the different multifamily developer, their competitors across the market, and how many groups are just really struggling. I mean, they just can't do anything. So I think, for a lot of buyers, it's not that they don't want to do something. It's that in some cases they've lost a lot of their people because they're not doing deals. People have left and tried to go somewhere where, maybe other developers where there are transactions happening, or they know like I can go tie something up, but I'm just going to spend pursuit dollars and I can't get it capitalized. So I think the challenge is be really smart and don't just go tie a lot of things up, hoping that in 6 months there's some massive upswing in the market and everything changes and all the math changes. But again, just being honest, like what really works, like what deals make sense and have the best chance of getting capitalized today. Where's our real story? What deals are not just commodity sites? And then going and putting a lot of effort and energy into making those deals happen and thinking outside the box about how to make those deals happen. I think the groups that have capital that they can risk are in a lot better position. Even if it's just earnest money and being able to put their own pursuit dollars to work to get a deal teed up. Unfortunately, a lot of groups aren't even in that position. A lot of these developers aren't going to use their own earnest money. They're not going to be able to fund a lot of pursuit dollars. And so those guys are really on the sidelines. And maybe that's a little bit of a difference in Houston over Dallas. I feel like Dallas, it seems like there's more activity. And it also is use type. So in Houston, we have very strong industrial, activity in the market. We have pretty strong single family developer activity, even despite challenges with builders, pulling back. But on the multifamily side, overall the rents are pretty soft, suburban and infill. And there's a handful of developers who are still active, who are making offers and seem to be getting deals capitalized. They're just being very picky and careful. And then there's a lot of developers who are just out of the market. And then there's the couple that we're very wary of that are trying to tie stuff up that we just know, like they dropped 3 deals last year and they're like, we don't think that they're going to get anything done, and so we're just careful about, letting them off, letting one of our sellers select them. We're being honest with our seller. Hey, watch out for these guys. They're dropping sites.
Yeah.
So what are you seeing in Dallas?
I think you're right in that. I think it's interesting. Houston is such a huge market. I mean, the population is massive. There's a ton of jobs being added. You have the port, the med center, you have the energy industry, but it seems like it's almost more of a local market from a developer standpoint. So there's the developers, like the one that you referenced that you met with, that they're going to develop in Houston, and they're going to develop in Houston, like year in and year out. I mean, they have an office based there. They're going to do deals in Houston. And there's some really successful developers like that over the years, like Morgan or Martin Fine, groups that were based in Houston that would always do projects in Houston. But what's a little bit different about Dallas is, I saw this when I went from really studying supply of who's doing multifamily projects in Houston to moving to Dallas and then studying the exact same thing. There were so many groups I'd never heard of when I first moved up here that had projects, proposed around town. And the supply numbers were just enormous, and they still are. It's kind of crazy because Dallas is not really a bigger market than Houston from like a population standpoint. I mean, you add Fort Worth, and it is a larger population, but it's not significantly larger. But we add so many more units up here, so it's a really interesting dynamic. But up here in Dallas, I would say that it's on the radar of just a lot more groups. So we'll meet with developers from all over. And it seems like in the last few months, it's been a lot of developers from out of state. There's a lot of groups from like the Midwest, the East Coast, kind of the Florida market, even the Southeast, a lot of developers based in like Georgia, Alabama. And they maybe have or have not done anything out here in DFW, but they want to. It's like their expansion market that they want to come to.
Mm-hmm.
And because of just how the state is setting up right now, everyone wants to be in Dallas. Back in 21, it was, we would meet with groups like that, and it was they wanted to be in Austin, and then they wanted to be in Dallas. And now it's kind of back to like, we want to be in Dallas first. Now, a lot of those groups will never do a deal in Dallas. Like we sent out some new listings, like I said earlier, and called a guy, and he's like, yeah, I just got laid off.
Yeah.
And this was a group that they literally just started their platform like within the last 6 months to come into Texas, and they already pulled back. And I think we're going to continue to see quite a bit of that because there's been so much shifting around. And it really is for these developers, especially when you talk about multifamily. I feel like there's just so many more multifamily developers than there are industrial. It's like a feeding frenzy for just the few sites that are actually going to be able to get capitalized. And unfortunately, we've seen this so many times, the ones that can't get control of those deals that actually get capital, they'll pull back or they'll close their office, or, they'll lay those guys off and they'll go work somewhere else. So it's an interesting dynamic. I mean, it's everybody wants to be here. Everyone wants to do deals in Dallas. And then you go show opportunities and it's like, oh, it doesn't underwrite. It doesn't make sense. And you're like, well, these are the best opportunities in the market. Like, it's not, and then those are going to underwrite for some developers.
Yeah.
But for a lot of the community, they're just on the sidelines. And I think what you said earlier is you have to be willing to, which it's hard because the developers want to have conviction, but you have to be willing to go chase after a deal that is a good deal.
Yeah.
And I think that's where you and I will say, like, that guy's a good developer.
Yeah.
The guy you were just talking about, like, he's a really good developer because he's been in the business long enough to have the gut feeling of it may not underwrite on a piece of paper, but I can get that deal done. And like, I'll do anything it takes to get that deal done. Like I'll go get, turned down by a bunch of banks and a bunch of equity partners. I'll redesign it 10 times. I'll do whatever I need to do and I'll get it done. And we've seen him do that over the years. And that's pretty different because there's other guys that it's a bunch of LOIs, it's putting properties under contract, and it's hire a capital markets broker to try to kind of like do the work. And then, 60 days later, you don't have good feedback, you drop the site.
Yeah, that's a great,
we've seen that so many times.
That's a great point on the groups who are the best developers and really get deals done. There's like this determination of I'm going to make it happen. Like nothing's going to stop me. And they know when to focus that kind of energy on the right sites. They're not just tying up a lot of random sites and then having that kind of energy. It's like, I believe in this site and we are doing this deal. And there might be environmental issues that pop up. There might be market conditions or capital markets issues, but it's going to happen. And I think a really good point I was thinking when you were talking, so in Houston, there's probably maybe 4 or 5 like truly active multifamily groups who are getting stuff done. And I'm seeing 2 different perspectives. So we're talking about, these are buyers now that are real, that have capital, they can get deals done. On one side, there's a group who is going to say, hey, we'll pay that extra 10 or 15% to get the deal. Like if it's a deal that we think fits, that we can get done, we are going to pay extra and we're going to get it done. And then the other group who's also very real, we're closing deals with them and they're great guys, but they're saying, hey, it's not a seller's market, it's a buyer's market. The market should be discounted. The market should be 10 or 15% less for the good sites because there's not activity. There's not 30 groups out there doing deals. There's only a handful doing deals. And so we're seeing them miss opportunities because they have that kind of mentality of it's a buyer's market. So we want to offer 90% of where we think, the market could go because we should be getting deals right now. And so they're missing out on deals, and it's not that much money they're missing by. And I think if you're thinking in terms of like, some of these deals are going to be good development deals, especially like you referred to, when no one's doing deals and there's very little getting done. If you go get the right deals in this environment, those will be the deals that are super successful, 3 to 5 years from now. And so if you're looking at, the land basis is such a small piece of that, and you won't stretch that extra 5 or 10% just to go get that deal, or you're saying, I won't condense my timing at all, or I won't put up hard money, earlier in the process because I shouldn't have to do that because it's a buyer's market. You're missing these deals that are, could be some of the best deals you've ever done.
Yeah, I love how you just talked about that because I have that conversation a lot with buyers where they believe the market should be a certain way, but all it takes is one other buyer that's real that thinks differently. And so that
Yeah.
other group that's willing to say like, we'll pay for quality, understanding that it's in these type of markets that you can actually get control of the best sites. And you don't want it to be so hot. I think that's the thing. You don't really want to be buying sites in a really, really hot market because then you'll be competing with so many people.
Yeah.
And even though you referenced maybe 5 groups that are kind of real and getting deals done, how many groups do you think are out, overturning rocks and making offers? It would be a lot more than 5.
Yeah. I mean, we're not really seeing that in Houston. Or what we're seeing is like extremely weak offers, just like some of these groups who are like maybe active, and that they're making offers. I mean, they're just not even close, like really long time frames, no risk with earnest money, really below market expectations on offers. And so, and they're not closing deals. They haven't closed anything in some cases, 12 months or 24 months. So it really in Houston has been a smaller group of, and there's always like the random, JV deal or, there are those kind of deals that happen, but they're kind of random. They're not groups who are out doing multiple deals. And so it has been a smaller group really the last couple of years in Houston once rates went up. Really kind of took out a lot of groups.
Yeah, what I meant was 5 real groups doing deals, but what do you think the number of groups are that are just out making offers that aren't real?
Yeah.
I'm more saying that are confusing the market.
Yeah, maybe 12. I would say 10 to 12, something like that. And I think it is kind of site specific. So in the infill market, you may get some groups that come out of the woodwork. Like I just had an offer on a site from a non-traditional multifamily group. They're a very wealthy, high net worth family. And they made an offer on a site to do retail and multifamily on it. And they're not a multifamily developer. But they really love the real estate. So you get those kind of things on certain sites that are kind of unique. We're on a suburban site, you get a different group. But yeah, I think to your point, there are offers out there that are just, they do kind of sometimes muddy the water a little bit, know, for a seller.
Well, that's what makes it hard is when there's just a lot of, if you're a seller and you're just getting offers from groups that really their whole thing is just a piece of paper.
Yeah.
That just makes it really difficult. But then it's knowing this is going to be hard to get done, but you want to pick one of these kind of short list of groups to actually go try to execute on this, but it's still going to be difficult just depending on the site and the situation.
Yeah. And knowing the local market is so important. Like another infill site we have that has environmental issues, we did have on that one, maybe 10 offers or so. But so we have some very strong offers I'm really excited about. But then we had a couple offers that are from some out-of-state groups. And I was like, I just know like this, one group in particular has dropped multiple sites. Like they're real in the sense that in their market, they're real. But it would be crazy to give them a shot on this deal. Like their chances of getting it done, I think would be so low. And especially coming to Texas and then working on an environmental issue like this, where there's a lot of nuances, I would feel much better about a local group who has a lot of history working on these infill sites and working on environmental issues like this, getting that done. And that group actually happens to be offering a higher price anyway. But I think when we look at a list of offers, I think we put a different weight, not just on pricing and terms, but just on who the group is and how they match up or don't match up to a specific site.
Yeah, no, that's good. And I think that, I know we're not really talking about Austin, but I think that with Austin, it's been a more of an oversupply market. They've had some challenges with rents, but I think that, and Tripp talked about this, when he was on not too long ago, I think you're starting to see people believe that if you want to do development in Austin, it's probably time to start looking again instead of just waiting, until like everyone's looking. Because there was a while there where Austin was so hot that if you found it just a site that was zoned, it was like people were just buying it and buying it quickly, and it was above market. And now I was talking to a developer that they're really excited to look in Austin because you can actually go buy really good sites in Austin, like really incredible locations, just because it's a difficult time. But I think, again, as a developer, being careful you're not waiting, because normally if you're waiting for it to get hot, we've talked a lot about developers that they always kind of wait till it's really hot and then they buy, and then it's kind of the end of the cycle. And then they're leasing up in the down part of the cycle, and they overpaid.
Yeah.
And it's hard to know. It's really hard to time the market. We've talked about that. But I think right now where we've been sitting, a couple of years of just kind of not great growth, but just consistency, it's hopefully only going to really be getting better from here. If it does, then I think now would be a really good time to be buying, because what you're describing in Houston is like pretty much zero competition
Yeah.
for good sites, which means it's a really good time to go be a buyer.
Yeah, it looks like you have lower supply, and then, depending on the use type, but lower supply, and then probably a lower rate environment, maybe in 27 and 28. I mean, we'll see if that happens or not, and how long that actually lasts. But I think there's reasons why this year in 26 could be a hard year to get deals done. But you could be really glad you did those deals in 27 and 28. And if you wait till 27 and 28 and you jump in with everyone else, that you're in a situation where, man, we're now the field's crowded. Now there's a lot of supply. Now when you deliver those deals, you're in lease up, with multiple deals you're competing with. I think what will be very interesting on the multifamily side in particular is just seeing what happens with the rents this year. I don't know what they're like in Dallas, but in Houston, they've been pretty soft. And so, do we see rents stabilize and start to come back up, which you would think since supply is lower in Houston, or are they just kind of still soft, and I think that'll have a big impact on what happens the next couple of years here.
Yeah, I think that we're in the same boat. I think that they will stabilize and start to come back just because of supply, but they've definitely been soft just because of the incredible unit, development that we've had. The last thing I was going to say as we kind of wrap up was just with Ascent and with our investment platform, I think we're taking this advice to heart of not just waiting for the market to be better. I think definitely from a buyer standpoint, we think this is a really good time to be buying. But also from a selling standpoint, we're working hard right now. We have several of our sites that we own actually under contract to sell. And, we tried to buy these sites really well, good locations, good exit strategies to where we can sell kind of regardless of the market. And we've been able to do that in most cases. And so I think, same thing. We're not, like you said earlier, looking to hold for just a slightly better return. If we have an opportunity to go and make a good sale, we're gonna do it.
Yeah, absolutely. And I think also on the buy side, I mean, we're always trying to buy, and I think that's the best, the strongest developers or investors we've seen are typically always trying to buy good deals, and they're always trying to sell if they can sell it at a price that works. I mean, unless they're just in some devastating market correction that maybe they're going to pause a little bit, but we're not always placing the same amount of money because we can't always find the deals we want, but we're always trying to. And I think that's really healthy to always be in that place of working on that and not just checking out of the market because you think you understand, where you are, what's going to happen. Because none of us really know exactly where the market is or what the future holds.
Yeah. Well, thanks, Tim. I think there's a good conversation. This is for those listening. If you're a landowner connecting with us to talk about your property, and I think we'd be happy to do a broker opinion of value, talk about where we think it would shake out in a marketing process, what the value would be. Again, not just waiting, thinking land prices are just going to shoot up or come back, or this is going to happen in the next 6 months, but getting with us now and we can talk through that. And then for buyers, we clearly in Houston, there's a lot of really good opportunities that maybe aren't getting some of the looks that they should be getting. So getting more focus on that, I think it's a really good time to be looking in Houston, in Austin, and Dallas is obviously busy. So connecting with us here in Dallas to discuss.
That's great. Well, thanks, Tom. That was good.
All right. Thanks.
Thank you for listening to our podcast today. If you have questions about land you own in Texas, send us an email at texaslandguys@dmre.com and follow us on LinkedIn to stay updated.